Welcome to another session of RM Smart Investing. I hope you all are doing fine. In today's session episode, we're going to speak about how to analyze 8 important currencies. In the past, we've had classes on Forex and Forex trading, and we've talked about Bitcoin and the dollar and the gold, but I have not seen any independent individual analysis of different currencies. It's really collective. So I thought, well, why don't we look at some of the important currencies and how we can approach analyzing them? Um, I saw this quote a long time ago. It's not even, it was a saying, I'm not sure who said it, but it really made sense that a currency is a mirror that reflects the credit worthiness of the country using it. And I think it gives us a really big message, the way we look at currencies. I know there's a lot of short-term trading that we do, but fundamentally, I think this is a very important thing. So in today's session, these are the things that we're going to cover. Um, and basically, there's going to be some macro things, but also some, maybe tidbits of interesting facts. So the first thing is, what affects the exchange rates? So these are common things to majority of the currencies. Also, we look at the dollar index. What is this dollar index? We think that dollar is against something else. So what is it really comprised of? And the bottom line of all the things that we do, it's central banks. Central banks play a huge role regardless of what kind of a currency there is. So I will emphasize that, and we will look at the information about these important currencies. Also, I want to understand this interest rate parity. We've talked about it in the past, but I think it's important to know how these currencies are valued based on interest rates. This is going to be a fun fact. I think just having a little giggles that not it might be helpful. It's the currency nicknames. We talk about these currencies, and as a forex trader, we always have some of the names. So we look into that. What are the commodity currencies? Currencies that, depending on the commodity movements, as and especially in the last 3-4 years, we've seen it. And then we're going to dive into individual currencies. And those top 8 are the euro, Japanese yen, British pound, Swiss franc, Canadian dollar, Australian dollar, New Zealand dollar, and Chinese yuan or renminbi. And we'll discuss those. So this is like the first thing in the morning, when this is actually the closing of the day. Saw that. And you see there's like 10 currencies and cross currencies and that we follow. This is from Finviz. Now, gold could be considered an alternative currency, and of course now cryptocurrencies like Bitcoin, which have been making a lot of noise, and they're becoming more acceptable. So with that, we've already discussed those, or we could discuss in a separate session. So my goal is on the 8 other ones, and here we have 7 of them. We have the Swiss franc, we have the Aussie dollar, we have this is across the euro, British pound. We have the Canadian dollar, New Zealand dollar, euro, we have British pound, Japanese yen, and then we have the cross currency British pound yen, and of course Bitcoin. So you can see the movements, but our intent today is more on the fundamental side rather than like a short-term trading side. But this is what we're going to look at. So let's think about this. What affects exchange rates? There's generally macro forces, and there are many of them, but I think the majority of what we deal with, it's compromised in these 7 factors. The number 1 is interest rates. And again, we think about central banks, and this is a common thing. So interest rates, and for decades, we had no idea about inflation. Now, a lot of people are familiar. Our generations and new generations can understand what is inflation. So inflation rate plays a role. Of course, political stability, it is important, and we've seen it, especially again in the last couple of years with the geopolitical events, how that affects the currencies, the government debt, and that's a big one, the fiscal responsibilities, the speculation, depending on, again, the movement of the money and the trading and the speculating, and also health of the economy, GDP growth. On top of all of that is the trade, and that also has played a role, and trade actually plays a huge role. So these are the major factors. So when we look at the individual currencies that I'm analyzed, I just want to be aware that these are all applied to them. So I'm not going to be redundant. So I want to make sure you pay attention to that. So let's start with dollar index. I have a chart of a 25-year chart of the dollar, and we'll discuss what is this dollar index. And you can see, we had the internet bubble, and of course, we hit the highs, and then the Fed actually started increasing rate at that time, and then we had the recession, and of course, what happened was we had the financial crisis, and it's just been lately we can see that since 2015, of course, we had the euro, the pigs, PIIGS, events was happening. And then, so we can see now the dollar has had a big move, and it has been the strongest currency. And I wanted to also use, especially when it comes to Forex, the Fibonacci's are applied quite a bit. So this is on a monthly basis, and I'm also used a 20-month, 50-month, and 200-month, just although they're very slow, but just give you an idea where we stand as far as the trend goes, as far as where we have been. And right now, as you can see, the dollar index is just sitting right on the 20-month moving average. So we broke below it, we came back, and we are about to cross it. So basically, this is where the dollar's strength has been. And we are, you can see we are right against 61.8%. So that's a challenge. And as you know, many of you know, we call this zone between 50% and 61.8 an ambush zone. And because of this, you can see we've been just floating for months. We broke out, but then we failed. So this is a good zone to play the dollar. In the past, I've said that 100, about 99.6, I would say, is important support. So, and as you can see now, is about 105 is important resistance. So either way, we gotta watch that. So we are kind of in a neutral zone, but we've had obviously strength in the past few years. As far as the dollar index, it's not like just dollar against euro. This is a basket of 6 currencies, and each currency has its own weight. So euro is the major one with 57.6% representation. So that's why you see when the movements happen, usually the euro and dollar go opposite directions. So not 100%, but it is being the biggest part of that basket when euro is again playing a role on this, it gives the strength to the dollar. So Japanese yen, so this is the other side of the right. So the dollar index, so the strength, that means the weakness on the other one. So the second biggest portion of the weighing comes from Japanese yen at 13.6%. British pound is a third at 11.9. Canadian dollar, and then Swedish krona and Swiss franc. So I haven't spoken about Swedish krona, although it represents 4%, because of the really, when we do the cross currencies or we do the trading, it is not, I look at the liquidity, it's not as attractive and as representative of the other three that we're going to talk about, the Aussie dollar, which has really been moving, New Zealand dollar, and also Chinese RMB. So those are the other three rather than Swedish or Norwegian krone. So Again, pay attention to central banks because they're the key. You want to know when they're coming with the news, when they're going to make a decision on the interest rates, what are their attitude toward the inflation, the employment. So these are the important economic events. So you want to pay attention to that. So what I wanted to give you, again, our goal is to make you independent so you can understand how to do your own research. So here's a little tidbit about European Central Bank, and this is their website. There are so much information on these websites, and the same thing. I didn't put the Federal Reserve, but each Federal Reserve set, when we look at the Federal Reserve Bank of like whether it's New York or St. Louis or Atlanta, each one of them, they have unbelievable amount of information. So I encourage you to look into these websites if you're really interested, let's say trading euro. So this is with this Swiss National Bank, also an important central bank, Bank of England, we have Bank of Canada. So these are all the information that you need. You can, again, you can go on their websites. You can find out on the calendar. Every week we do look at the calendars and we look at, some of the upcoming announcements from the Bank of, let's say, England or Canada. So follow those. We have Bank of Japan and People's Bank of China, again, with the websites. And then also the Reserve Bank of Australia, which is important, and I would encourage you again, especially if you're in the commodity arena. I think that you will get a lot of information, and also Reserve Bank of New Zealand. So, with that in mind, we looked at all the factors. I think this is important to understand what is interest rate parity. And the way it is a differential between countries. And what it is the forward exchange and spot exchange. And what that means is based on interest rates, if there's a higher interest rates, and let's say it's today's dollars, when we look at forward, based on, again, in a healthy economy. So I don't want to, this is not comparing Argentina or Turkey. This is about, again, established currencies. When we look in forward, if there's a higher interest rate, so consequently, the forward rate should be higher. And that means that the value of that currency should be higher. So that's what money, and I've said it before, money is like a river. It moves wherever it's the best opportunity. So if you're comparing to currencies, and we've done that, let's say with the US dollar, and we look at the euro, for instance, if US dollar is paying a higher interest rate than euro, then that money naturally is going to move to United States. And that's the supply and demand. And also because of the high interest rates, the forward rates are higher. And consequently, basically the value of the dollar goes up. We've had this, we've talked about carry trade, for instance. The Japanese yen has been, with their interest rates being in negative or at zero, people would, the traders would borrow at Japanese yen, which is really very low interest rate. And used to be big in, the past decade, we would go to Australia and we would do like Aussie dollar with a higher interest rates, very interest sensitive country, would pay higher interest rates, very inflation rate sensitive. So basically what would happen is the markets make money in that the difference. So when the economy was good, speculation or it was aggressive, the risk was on, the money would move to Aussie dollar. When the things did not turn out to be that great, there was cautiousness. One day will come back and pay off Japanese yen, their debt in Japanese yen. So they move away from, let's say, Aussie dollar or New Zealand dollar. In 1990s, believe it or not, we used to do Iceland's crown as a carry trade. We've had now we've done US dollar. So understand this interest rate. So money goes where the higher rate is in a solid economy. So a little tidbit as far as just giving you a little fun fact. We say, oh, Aussie dollar, or so I thought, how about if you just look at some currency nicknames? So, and I'll do a little history. I put down a little remark, so I just give you why these are called these nicknames. So take like a couple of minutes just to go over them. The US dollar is generally called greenback. And the reason was during the Civil War in 1861, they had to print emergency paper currency, and they were printed in a green ink. And that's where the greenback comes. Canadian dollar is called loonie. Some people call it caddy. We call it a scad. The funds, the beaver, but the loonie is the major one. And because there's a local bird pictured on their dollar coin, so that's a bird, so it's loonie. Australian dollar is called Aussie or Aussie, and it's just an abbreviation of Australian. New Zealand dollar is called kiwi, and that's their indigenous bird. That's the national bird, so it's called kiwi. British pound is called sterling, but also when we are trading, it's called cable. And the cable, the reason is back in the 19th century and actually carried to 20th century, there was this direct line, and that was the exchange rates were transmitted via cable under Atlantic Ocean. So it was under the water. And because of that, because these rates, they was called cable. Now we come to euro, which is really a baby currency. Remember, it was established really, it started in 1999. So now euro is called fiber because they're saying, well, we are not cable, we are fiber optics. So we are modern, and that's one of the perhaps explanations. Just they transfer the information through fiber optics, and they are much newer. Swiss franc called a Swissy, and that's just abbreviation. Japanese yen is ninja, is of course the heroic character. Now Swedish krona, we call it Stocky, and the Stocky comes from Stockholm, their capital. Now Norwegian krone is called Noki, and they just wanted to sound like Stocky, like a Swedish krona. So there's Stocky and Noki. Then we have Danish krone is Kope, and that's Copenhagen's capital. It's just a shorten from that. I'm going to continue a little more. Now, the Russian ruble is called Barney, and that comes from the old Flintstones from 1960s. I don't know if you ever watched it. And that was Barney Ruble, Fred Flintstone's buddy. So that called Barney. And then I'll go to Euro-Russian ruble is Betty, which was Barney's wife. And that's, again, from Flintstones. Now, Euro-British pound, the cross currency is called channel. And that is, of course, the channel tunnel through, going from UK to France and Europe. So that's channel. Euro-Japanese yen is called Yuppie. And if you squeeze, again, it's EURJPY. When you squeeze those, abbreviated, it becomes yuppie. The same thing with British pound. This is GBP. Japanese yen is JPY. They call it guppy, a dragon or beast. Again, we're squeezing the letters. And then Mexican pesos is called varos. And there was many ways you can say, different ways to call money in Mexico. And one of them is borrow. So, or borrow with the B or the V. So anyway, so just a little tidbit. Now, also there are commodity currencies. So these are the currencies that very much depend on the movement of the commodities. And as you can see, I have 8 of them. And there will be 3 of them which will emphasize. The other 5 will leave it for maybe future, like more of exotic currencies. So today we're going to discuss Australian dollar, Canadian dollar, New Zealand dollar, which all have a different commodity relationship. Norwegian krone, of course, very much oil-centered, energy-centered. South African rand is very much, as you know, more of a precious metals centered. Brazilian real, diversified commodities. Russian ruble, the same thing. And then we have Chilean peso, which is, again, more of copper, and again, the mining commodities. So let's start our kind of analysis of different currencies. So we start with euro. And again, this is a chart of euro. There was a actually negative, under parity when we started, and I remember these days going to Europe. It was like actually I was in Europe in 2000 on September 11th, believe it or not, 9/11 in 2001. And remember, it was great using euros, but then of course we had the big movement, and you could see that again when we go back and look at the dollar uh, chart, you see the complete opposite. So, and you can see again what we are here. We are uh, looking at again from this low to the high. We look at we are been again squeezed between the 61.8 and 78.6 because we're going from the low to high. So we played in that ambush zone back and forth and finally broke it. So once we break that ambush zone, is generally it's a very momentum oriented. So and remember the currencies are very much trending, especially commodities like Aussie dollar, gold is trending, and euro. So you can see once we broke that 61.8, it was continuous to that 78.6. And then we stabilized there. Now we're hitting our head against that 61.8. So be aware of that. So basically, what you should consider when it comes to euro, obviously, in the last couple of years, been the geopolitics very much in the mind. And of course, with the inflation, the recession is important because of the effects of the geopolitics, especially in the Eastern Europe. And so we are looking at unemployment, but also they're watching the U.S. politics. We have the election year this year, for instance. Who's going to be in the office? What kind of aids is going to be, or the contributions will come to Europe? And the other thing I think it's very important, Germany being the largest economy, as they say, uh, uh, where Germany goes, so does Europe. So it is important to follow the numbers, the economic growth, as far as interest rates of, I mean, again, you can individually, you can see the countries, what is the attitude, the sentiment. And one of the things you want to follow and put it on your calendar is the SWE indicator of economic sentiment. And that tells you it's a survey of 350 economists and analysts. And they look at, okay, in the medium term, where is Germany heading? What is the future? So it is important to follow this. It is that the confidence. So Japanese yen. Japanese yen, believe it or not, yen actually literally means circle or a round object. And it was created in 1871 under their new currency act. They used to be gold standards, but like anything else, everybody went away from those gold standards. So you see, this is a US dollar against yen. Again, in the beginning, remember the dollar was getting weaker against all the currencies, and then the base. But look what has happened in the last 3 or 4 years. Uh, Basically, we are looking high of 25 years. So I would watch this carefully, see if we are going to top out or are we going to break above this high. So this is a huge move. Again, the whole idea for Japanese yen is stimulating the economy by lowering their interest rates, creating inflation. So what you have to look at, what is happening in Japan right now is, first of all, they're on the largest, they have largest debtors, net external assets. That's where their money, the interest comes to them. So they have over $3.3 trillion as of end of last 2023. So basically, the problem is it's the dividends are getting lower. So the money which is coming from outside is getting less and less. Now, we've had a new regime, and for the first time, they're talking about a different complete policy, but as always, a very gradual. They don't want to rock the boat, so that's why the yen is still being low. But we have talked about Japan. This could be a good time, maybe start investing in Japanese economy and equities. But there are these concerns. They have come, they want to do maybe, they have lowered the taxes for small businesses, so that means less revenue. So these are the risk that they are. Also, you have to remember, Japan is a net importer of energy, the oil and gas, and what happens with the prices affects them. So obviously, much lower oil prices will help them. If it's higher, it will hurt them. So with Japan, I would encourage you, like what we did with Germany, there is something called Tankan survey, and that's also looks at assessment of the business condition. There's a survey, they look at what they think. Again, if the things are positive, it's above zero. If it's negative, it's below zero. And it again looks at the conditions, and they were right when they looked at, and they were negative. Again, this was for the most period from 1991, if you recall, end of the 1980s and the collapse of the real estate and everything else really in Japan. From 1991 to 2000, it was negative, and that was telling us that there will be prolonged economic stagnation called lost decade. So again, it's an economic indicator. Follow that. Look it on your calendar. Put it on your calendar if you are trading Japanese yen and or looking at investing in Japan. So British pound, you can see British pound has always had large premiums to the dollar. And they for the longest time, maybe it was like a 2-to-1. That was the thing to be. And then they actually went like dollar. They started going down in the financial crisis. And of course, who can forget the Brexit, and it was June 26th, I believe it was, in 2016. That was actually one of my best trading days. I came back, I was on vacation, I came home and they were doing the Brexit, the voting was going on, and I just went to the office for like a few minutes, ended up staying about 8-9 hours, and started trading at that time. And basically the rest is, the effects of the whole Brexit has been felt, as you can see. So British pound has been getting weaker and weaker, and then we actually came very close to parity, which I had not seen, God knows, I don't think, I've never experienced it. So, and that was, if you recall, that really the political situation with the prime minister, and they were going to cut drastic. This is again right after the COVID, and they were drastic tax cuts, and of course the shortest um, duration of prime minister. So, and then of course we've had this bounce. But do you look at again the charts? Again, this is on a monthly. We are hitting our heads against 23.8. So, and also the 50-month moving average. So hopefully from technical point of view, it gives you on a long term where we are looking at. So if we break this, then that will be something that would be positive, and that it could be a momentum. Of course, you want to look at daily and hourly and all that. So when it comes to British pound, you have to also remember after the Brexit, we've had, obviously problems, but British economy is 82% service sector. It's not manufacturing, unlike some other economies. And it's, again, it's 82% of their GDP. And they are the sixth largest economy in the world. But also, they are more immune than European continent in regards to the crisis with the energy went through. So they are more diversified. When you look at the FTSE index, for instance, you see quite a bit of different sectors, including energy and financials. So they are not, when like 2022, let's say the technology sector collapse, really, it was really lost a lot of money. It didn't affect them as much because they have a very diversified in that point of view. But again, Brexit was a big factor, and also so they have their own uh, uh, concerns, but especially again with the recession and the concerns are at the horizon, and then they're trying to stabilize from the political point of view. So basically that's there. And also I want to share with you, this is the cross currency of euro versus British pound, and you can see the opposite. The euro was very strong against British pound till 2009, and then after that was weakened. And now again we are in the last 5 6 years, you look at, it's been very much a range bound, so back and forth after the pre-exit. So just a food for thought. Now, Swiss franc, it's used to be, it's a safe haven. Everybody would talk about it, but um, we had the central bank of Switzerland came, and they never make drastic moves. And once they made it, you see we've had this really range-bound stability. Uh, it was when you look at the dollar, for instance, Swiss has always been strong against dollar. It was a great, I remember some really good trades with that. But now you look at the last 11, 12 years, really, they haven't done anything. You see that 23.8% Fibonacci has become the line in the sand, and the 200-month moving average. Um, so obviously the dollar has been weak but very stable against Swiss franc. So when you think about Switzerland, you're thinking of, okay, they were the largest gold reserves, they were the safe haven. But what happened, like anything else, they decided to get off the gold standards. Remember, this was the Swiss franc and gold. They always went hand in hand. They hold some of the largest reserves, but they don't have the gold standards. And even in 2014, they were ready to return to gold standards. They called it Save Our Swiss Gold motion. But the Swiss national banks should have included at least 20% gold, and um, should be banned. And of course, the voters rejected the whole thing. So just a um, thought for that. So for Swiss franc, remember, the first thing you think about is neutrality with all the things going on in Europe. Again, the stability. But they are, again, affected with global economy. And the reason is, 5 of the top 10 uh, biggest companies in Europe is Swiss, and they are export oriented. So they do, that does affect them. But the good thing about Switzerland, you can see the stability, is that they have a low inflation, and they are kind of an independent, very wealthy country. So that's as far as Swiss franc. Canadian dollar, our neighbors to the north, uh, again, you see that the dollar was very weak, and then since then has had strength. We are in a crucial point in that, like, again, we see this ambush zone. We are right at that 61.8. So the dollar has become stronger against the Canadian dollar. And so what affects the Canadian dollar? Of course, they're big producers of oil, so the oil economy does help them, but they are not as dependent. It's just not like just the oil, because it goes up, the Canadian dollar automatically should go up, although there's a big correlation with the oil. It does depend a lot to US economy. They are both countries, they're the biggest partners. So when US gets sick, Canada gets even sicker. So it's very important depending on what the US is doing, but also their internal politics, their government policies, uh, that affects them quite a bit, whether it is as far as uh, some of the social programs. The other thing I want to add here is the liquidity. So when you think about all these currencies, we want to make sure we understand. Let's say there's a portfolio manager who has I don't know, wants to invest $1 billion or $10 billion, or what it does, it's a lot of liquid in euro. So when it moves to euro, it can easily invest at $1 billion or $2 billion. Canadian dollar is smaller, so it will affect a lot. So that liquidity plays a role. So they put smaller amount toward Canadian dollar, for instance, because of that. So liquidity does play a role. Speaking of the commodities, we have this Australian dollar, and you see this fantastic move of Aussie dollar against US. Of course, it was I mentioned about the carry trade. You could see the higher interest rates. It was very attractive. You would make a lot of, just in the bank accounts. They were paying higher interest rates. And then since 2012, 13, we had much lower movement. And now we are, again, went, we broke that. This is our ambush zone again. We went right to that 78.6, came back, hit against that 50%, rejected. So we are in a kind of a no man's land. So there are a few reasons that weakness here. And one of the reasons is the demand for natural resources. They are a China story. So when we think about Australia, it's important to know that they have a huge trade with China. And as you know, we will talk about Chinese yuan and renminbi. We see that, with all the policies in China and the slowdown and all the, it does affect Australia. So, and Australia is again, a growing economy, and inflation does play a role. So they're always watchful of that. But the global economy and China, I think they're the two major things that you have to watch. So a healthy China will help Australia. And I mentioned about the commodity. So this is the CRB index in blue, and this is the Aussie dollar against US dollar. And you can see again, the movement and again, the correlation between the commodities and Aussie dollar. Now, you can see in the last few years, it has not been as strong. The reason is, as I mentioned, I think that's more of a China play. Australia's, I would say, younger sibling is New Zealand dollar, and New Zealand dollar also paying a very nice interest rates for the first part of the 2000s, and they did very well. And they are in a similar stories, not as bad as Aussie dollar, but still, you see that weakness. And where are we now again? Between the 50% and 61.8. So this is important area. So I will look at this again on a monthly basis. We see where we go back and forth. So once we break either side, then we can make a trade if we like, again, in the long run. So what we should consider, first of all, New Zealand for the past 20 years, they have really enjoyed moving away from agriculture more to manufacturing and service. So that has created a high income, and the higher income has produced higher inflation. And they've had also a lot of disposable income. And if you go to New Zealand now, the value of real estate is very high. So it's pretty expensive to buy properties. So generally, they are more hawkish when we talk about Reserve Bank of New Zealand. As a matter of fact, I share a story. I had a friend who was actually the vice president of the in the Reserve Bank of New Zealand. We used to have conversation. He left them for UNICEF a few years ago, working in Myanmar and Thailand. But he would say that it was very orderly. Like they would announce the interest rates a year ahead. So there was so much stability when it came to Reserve Bank of New Zealand. Things have changed, and that again, things has been moving. So in last few months, as you could see, there's been some movement in the New Zealand dollar, and there is a reason for that. Is domestic policies. There have been, that they had elections, so that's domestic policies. But also, New Zealand is different than, let's say, Canada or New Zealand or Norway. We talked about crude oil and precious metals. New Zealand is more agriculture commodities, and they're fantastic. You know, dairy products and the meat. And again, this becomes more of a China play. So they used to export and but also indirectly China played too, because they are very much follow what happens in Australia. There's this regional relationship. So there is this close-knit relationship with Australia. So whatever affects Australia, it affects New Zealand. So you want to be aware of that. But again, it goes back to that liquidity I mentioned about Canadian dollar. So it's because of, again, uh, portfolio managers and traders, it's because of the smaller economy, it's not as much liquidity in trading, but still it's an influential currency. I also want to look at the relationship between the Aussie dollar and New Zealand dollar. You can see really basically flat. Look at these moving averages. I mean, we've been flat since 2017. So that shows the relation between how closely they follow on each other. The last but not least is our Chinese renminbi. And you can see how the dollar has been very strong because because of the trade. We obviously there has been what happened, after the COVID, and then the stimulation or the stimulus packages, and then you can see the Chinese policy come into the picture. So basically, when you think about renminbi, it is the official currency. They are the fifth most traded currency, believe it or not, as of April 2022. And yuan, we usually just say, oh, Chinese yuan is a basic unit of renminbi. And it's generally, again, that's renminbi is and yuan, we use it interchangeably. They do have by far the largest foreign currency reserve with over 2.5 times more than the second largest holder, Japan. And when China and Hong Kong, you put the reserves together, they were over $4 trillion. And the reason for that is, of course, for the past 20 years, China has become a big exporter. So they're involved with a whole the economy. So that's what they've been holding their money. But as you will see now going forward, and we've experienced in the past year and a half or so, is President Xi Jinping's policies has really affected their economy. But also this year, for instance, we're looking at how aggressive will they be with their fiscal expansion. As a matter of fact, March is ahead. They're thinking of stimulating the economy, but again, they put a hold on private sector, so that's a big factor. Property markets have been in obviously a lot of stress. Chinese government has tried to stimulate that, so that plays a big role going forward with Chinese renminbi. Also, U.S. politics, the election in the United States. Although it looks like the Congress and the legislative and executive over is in charge, they do not have a very positive outlook for China in a sense of the trade. But as you know, if ex-President Trump all of a sudden if it gets elected, it's going to be a lot harsher. So China is watching that. And of course, the global politics. A lot of countries are, because of the relationship of President Xi and President Putin, they have been some backlashes. So those are the things we have to watch. And basically that affects the future of China. With that in mind, I hope this was helpful. It was something I was trying to do in a shorter time, but I don't recall seeing anything done individually. So I thought, let's do this. Anyway, thank you so much for your attention. And what are we going to do? Stop recording and open up for a Q&A. Thank you so much.